Hey guys, welcome back. Thanks for joining me again. I'm sure some of you watched my earlier video where we kind of geeked out, did some quantitative analysis, dove into a bunch of coins. It's a great time. Now we're kind of switching gears here and doing some good old-fashioned roll up your sleeves, fundamental analysis. In reality, uh, this is what's actually might drive Bitcoin to all-time highs, whether it's 30, 40, 50, 60, 100,000, who knows? But there's a lot of good things in the works right now, whether it's potential Bitcoin ETF or BOCT with the with ICE. So there's a lot of cool stuff going on. And that could really be the catalyst to all-time highs. But I really want to dive into the presentation that Van Eck and SolidX and CBOE gave to the SEC. Now, a lot of you maybe have heard some of it, kind of heard the arguments they made, but we can actually kind of dive in behind the scenes and get an up close look at what exactly are they pitching. But most importantly, before we do that, I want to talk about why this is so important. And you actually see people say Bitcoin doesn't need an ETF. Okay, yeah, I guess depending on your definition of need, Bitcoin doesn't really need an ETF. But if we want to get mainstream, if we want to get the public on our side, if we want to get a lot of people investing in Bitcoin and potentially using it day to day, we need to ramp up our efforts. And ETF is a great way of doing that. And really, here's why. And the problem here is comes down to institutional investors. And people say, yeah, institutional investors can just buy futures, but it's actually not that easy. The reality of the situation is most people have a different idea of what an institutional investor actually is. Most institutional investors are not the UAE Sovereign Wealth Fund. They're actually your local firefighter's pension or some company's 401k plan. Or say your states, if you're in the United States, pension plan, things like that. And they all have what they call IPS or investment policy statement that dictates what they're trying to achieve, what their goals are, what they can or cannot invest in. And most of these investment policy statements, they basically say, okay, you're trying to achieve X return with X risk, but you can only invest in 50% equity or 30% bonds or 10% commodities, whatever it is. And there's some leeway in there, but generally there's pretty strict guardrails what they can and cannot invest in. And usually, frankly, I haven't seen any IPS out there right now that has cryptocurrency as a dedicated potential investment. Now, they might have some. I actually got the chat working. I see some stuff, so that's awesome. So I'll say hi. All right, so I let's see. Hold on. All right, so I said hi, but anyways, I certainly agree with that. So I think it's selfishly, obviously, an ETF is going to boost price, and I'll talk about it why. But it's also institutions are able to get into it because of these IPSs. There's no dedicated cryptocurrency or Bitcoin sleeve. And what they generally say is they might have like an alpha component where they could put 10, 20% of their portfolio into basically anything, like a catch-all. And crypto could fall there. But the reality is these IPSs, say most big pension plans or even your local firefighters or whatever it is, they don't necessarily have a team of CFAs or anything that are just focusing on investing. They're basically outsourcing the investment management to different teams. And they're doing that, and there's not really that many good hedge funds that are rated by consultants that do Bitcoin, especially long-only Bitcoin. Now, there's some managers out there that do futures, which is great, and they might have a sleeve of Bitcoin, maybe 5-10% of their portfolio, but they're also in futures of within wheat, gold, kind of traditional FX, whatever it is. So it's not truly a traditional kind of Bitcoin exposure. But where does the ETF come in? So when they have these 10, 20% potential sleeves for, say, an alpha portfolio, you have that, so you can invest there. But then they can't directly, generally, because they don't have the teams built out to invest in futures. But what they can, based upon their investment policy statement, invest in mutual funds and ETFs. So this is where it's kind of the holy grail, the golden goose, whatever you want to call it, where now these institutions might say, you know what, we want to invest 5% of our portfolio into Bitcoin. Right now, there's really no place to do that, no way they can do that. But if there's an ETF, they can just hop on their brokerage account and type it in, and they're off to the races. Or they might have a consultant kind of getting nitty gritty, but they could easily do it with an ETF. Right now, they simply cannot. Now, there are some institutions that can, the really big ones, but you also have just rich people, frankly, high net worth people. They sometimes are called like family offices, things like that, where a lot of times, if somebody has 5, 10, 30, 40, 50 million, that's a lot of money, but a lot of times they're not getting that fancy. They're still buying ETFs and mutual funds and things like that. They're not diving into futures. So, having an ETF that's cheap, easily accessible is huge for that market. I got a couple of notes I want to talk about too, and also why. Somebody mentioned that an ETF will boost the price of Bitcoin. Yeah, I think that's absolutely the case. Now, some of it depends. Are you talking about physically settled, where they actually buy physical Bitcoin, or futures based? I think both are pretty good for Bitcoin, but certainly if they're buying actual physical Bitcoin, that's excellent. So, here's an example. Okay. So right now, Bitcoin's price, last I looked, about 6,700 US dollars. And if an ETF, this Van Eck ETF, gets $2 billion, which is actually not out of the question, the very illiquid gray share, whatever it's called, gray trust ETF out there right now has about that. If they get $2 billion with a 6,700 Bitcoin price, that is about 300,000 Bitcoins that they will have to buy OTC and store. That's 300,000 Bitcoins effectively, really, for all intents and purposes, out of circulation. Because one thing about institutions, they're not like you and I. They're not like crypto Twitter, where we're trading, we're flipping, our turnover is astronomically off the charts. Institutions will buy Bitcoin and hold it for years. So taking that out of circulation, not only is that tremendous buy pressure, but it's going to create some major scarcity. Now, obviously, I'm not a massive price target guy. I think that's kind of BS, but clearly any ETF that gets approved in the US, especially say the Van Eck, that's going to be physical Bitcoin. I mean, you could see easily all-time highs, but whether it's 25,000, 30,000, 40, 50, I mean, who knows? It'll be a catalyst of which we haven't seen yet, in my opinion. All right, so what I want to do is actually jump into the presentation. And before I do that, there's a lot of people out there that think it's kind of a lost cause, but let's remember that the commissioners voted 3-1 to disapprove the Winklevoss ETF. Now, the Wink ETF I thought was pretty bad, but there was one vote yes. So it's not as cut and dried as what people think. I think we only actually need one more vote. So I think that's something we can actually get. Let's actually walk through the presentation. If you guys have any questions, feel free to ask, and I think we got one. So let me see what they asked here. Yeah, so they basically hand their money over to places like Northern Trust or BlackRock is the question, and that's absolutely the case. So the way institutions generally work, they have a consultant, and the consultant is basically a financial advisor for the institution. There's a lot of big consultants out there, whether you're talking Cambridge, Mercer, Callan, people like at Northern Trust, BlackRock too. So the way it works is they hire one of those guys, and those consultants generally rate managers or come up with a plan or what they recommend the asset allocation to be. And right now, there's not enough crypto managers out there that have been rated to be approved to be bought by institutions. And more importantly, there's just not the custody solutions. So once we get that, then these consultants can begin to amend these investment policy statements and say, okay, it's okay to buy Bitcoin via an ETF. And I think we're heading down that path. All right, let me share my screen here real fast. All right, hold on 1 second. I think I might have got rid of something. So just give me 1 sec. All right, here we go. All right, so hopefully you guys can see this. So this is the presentation that the CBOE, Van Eck, and SolidX team made to the SEC. They made it on August 1st. So well after they submitted their request for to get this ETF passed. So they actually been having conversations with the SEC. And here's a presentation. So it's pretty bland, to be honest with you. You would think they'd have a marketing team that could do a little bit better, but here you go. So it's the presentation for SEC staff. And first, they walk through, why actually Van Eck and team actually had a ETF disapproved back in 2017. Then they start to lay out the case and why this particular ETF should be passed. What's changed, what's in terms of this ETF and just the market to make this potential approval. And then they go into, with a fine-tooth comb, honestly, the exact major issue that the SEC is worried about, and that is the market manipulation and the unregulated markets of significant size. So first, let's just quickly kind of talk about why the Winklevoss ETF and the ProShares and Direxen ETFs were denied. And that's basically because the SEC is worried about market manipulation. And market manipulation primarily in unregulated markets. So the way they've been phrasing that this can be mitigated is if there's a market of significant size that is regulated. By significant size generally means if somebody wants to manipulate the market, they have to trade on that particular regulated market. And frankly, that's probably not the case right now because you can hop on. BitMEX has the most volume out there. And if you really wanted to manipulate something, you had enough money, you probably could. However, I also don't think it's so black and white. So we already have one commissioner that approved the Winklevoss ETF. So we're well on the way. And then the CBOE Van Eck has a lot of other pros. So it just depends, are they kind of drawing a line in the sand where they say a certain percent of the market has to be regulated or else there's no chance in hell of something passing? Or is there maybe one or two other commissioners that are going to weigh all the evidence? And I think that's the case, where they're going to see that the market's becoming more regulated, of significant size, plus the other benefits of the Van Eck ETF, whether it's OTC, which I'll get into, the pricing's better, the insurance, and the institutional base of the ETF. They're all pros that the other ETFs didn't have. So they're going to put all that together, vote yes, maybe, maybe not, but there's certainly a much stronger case. So either way, that's why the Winklevoss and the ProShares ETF were denied. And this is basically this exact same reason why in March 2017, they actually issued a denial letter. It said the exact same thing. So you can look at number 2. The commission observed, however, that significant markets for Bitcoin were unregulated as of March 2017. So basically no surveillance sharing agreements, and basically just couldn't get the underlying data in terms of the users and if any potential manipulation was happening. And again, they're just kind of diving into it, which we don't need to talk necessarily about the old case here. So what's changed since March 2017? So the first part here is actually exactly what ProShares and the other ETFs that were just denied, or I guess they were stayed, argued, that there's regulated derivative markets now. So you have the CME futures, CBOE futures, and others, and that they basically sum up to about $150 to $200 million. So it's a pretty decent size, but still relatively small, to be completely honest. And that was ProShares' argument that, okay, now we actually have a legitimate futures market that's regulated. Winklevoss didn't even go that route. They basically said Bitcoin cannot be manipulated. It's a 24/7 market. It's impossible to be manipulated. And that's that. That's why I think it was a terrible argument that really had no chance of succeeding. But at least, ProShares and their other futures competitors that just got denied and had a much more legitimate argument. But the reality is the futures market is just too small and didn't pass the significant market test. However, here the CBOE is also still saying the exact same thing, but that's just part one of their argument. Kind of the second part here, and it's pretty big, is that the CBOE is going to use over-the-counter pricing, and they're actually going to buy all their Bitcoin over the counter. So what does over-the-counter mean? That means phone to phone, big buyer to big seller, picking up the phone, calling each other. There's obviously a middleman, big institution in the middle, but generally it's you're talking much bigger buyers, much more personal transactions, and a lot less ability for the market to be manipulated there. For example, if there's a crazy wick on BitMEX for whatever reason, you're not going to necessarily see that wick in the OTC markets. That's just not how it works. It's not electronic. It's much more personal. And also what's important here is that these OTC desks, they're also regulated. They follow anti-money laundering, know your customer, and various other regulations. So, and also the CFTC has jurisdiction over these desks. So what Van Eck and the CBOE are arguing is it's not just simply the futures markets, the US futures market that's regulated. You also have the OTC market. So if you kind of begin to piece it together, you're actually getting a market that's a much bigger size. And here they actually go into kind of a little bit deeper on the CFTC having authority and regulation over the OTC markets, which is absolutely the case. And again, it's kind of another feather in the cap for the Van Eck team and potential approval of the product. And also, I mentioned before, information sharing agreements, surveillance agreements to be more precise. You have a few here. So you already have the CME, Gemini, and a bunch of others that are starting to pop up. And even though I don't think they're actually rock solid yet, but you have some Asian exchanges, especially in like Japan and Korea, that are beginning to ramp up their regulation. So that's coming on board. It just takes some time. But here, I don't think it's really a strong argument at this point. Now, this is one of the huge benefits of the CBOE Van Eck ETF. So in one of their denial letters back in March 2017, the SEC was worried about retail, kind of mom and pop people buying Bitcoin ETF, which I understand. I mean, obviously, we're all kind of mom and pop retail here, but the SEC wants to kind of dip their toe into the water. They don't want to dive headfirst. That's also why the ProShares and Drexen ETFs failed. You're talking there futures-based leverage. I mean, one of them was like a 2x short ETF. I mean, that's not just dipping your toe in the water. I mean, you're kind of diving headfirst into the shallow end, so to speak. But here, the reality is what they're doing is they're making the share price so high that unless you have a lot of money, and I certainly wouldn't be able to buy this, that you can't buy this particular ETF. Basically, we're saying it's based on 25 Bitcoin. They had a price of 8,100 on July 30th, so the share price would be about 203,000. And that's obviously going to adjust depending on the price of Bitcoin. But the reality is just a simple retail person is not going to be buying this. It's a much more institutional quality product, which will give the SEC a much more likelihood of approving as they want to dip their toe into the water versus diving into the pool. So really, Section 6B5 of the SEA, which is the Security Exchange Act. Craig mentioned, always protecting retail. That's certainly the case, and they actually a little bit further down in this presentation, they make an argument on why actually approving an ETF here is actually protecting clients. Not necessarily retail, but it's kind of picking your poison, so to speak. But yeah, Section 6B5 of the Securities Exchange Act is actually about market manipulation, and that's really the big hurdle. So Van Eck actually attacks it head first here, which is actually pretty refreshing, especially given Winklevoss and ProShares crew didn't really address it too much. So this is kind of what I was talking about. So with Craig's comment. So what the SEC is arguing right now, the market is too manipulated. There's not enough regulated exchanges. Therefore, to protect investors, they're not going to approve it. Okay, I understand. I mean, that it is what it is. But what Van Eck and the CBOE here are arguing is that by actually approving an ETF, you are protecting investors, because right now the markets are it's basically the Wild West. So by having an ETF, you're taking things like potential hacking off the table, security issues off the table, and some market manipulation off the table. You're giving a layer of protection to investors that simply does not exist right now. So, on one hand, they're trying to protect us by saying, okay, you don't want to have an ETF with market manipulation. But on the other hand, they're forcing us to go in the wild west of really crappy exchanges that potentially get hacked or shut down, or in the case of KuCoin, their offices don't even exist where people say it's supposed to exist. I know they technically moved, but I mean, all those things shouldn't even be on the table, frankly. And having an ETF begins to give investors confidence. So they're arguing that just by having an ETF will kind of build confidence in the markets. And these next couple slides just talk about that, which isn't that important, honestly. I don't think the SEC is necessarily going to buy the argument here that it's okay to have some market manipulation because it's the lesser of two evils, but it's still an interesting argument to make. So I'll slide down a couple. Here they actually talk about current products, the GBTC ETF, or I guess it's more like a closed-end fund with the massive premium. It actually has a $2 billion market cap. So saying that the Van Eck ETF can get 1 billion or 2 billion, therefore 100, 203 Bitcoins in their possession is actually very possible. But then here they actually just mentioned, I think this is a needed slide, although probably not too much for us here, that Bitcoin is not a security. It's totally unlike any other cryptocurrency, decentralized, et cetera, not an ICO. So one thing I did not mention that's not necessarily in this presentation deck is the create redeem process for ETFs. So a lot of people say, okay, like I mentioned at the beginning of this video, that Bitcoin doesn't need an ETF. And then the other argument is, well, you actually want to own your own Bitcoin. You want to have your own private keys, et cetera. But the reality is, if you understand the ETF mechanisms, by buying an ETF, you actually still kind of do own the underlying Bitcoin. And the way it works is, I'll give an example with the S&P 500. It's probably a little bit easier. If one of you guys had stock in each and every of the 500 companies in the S&P 500, so you had 500 companies in your portfolio at various weights, you could go to Vanguard, you can go to BlackRock, you can go to State Street, and they're all ETF providers, and you could say, I would like to have one share of one of your S&P 500 ETFs, whether that's VOO or SPY. I mean, there's a variety of them. And what they would do, they will take your 500 stocks and they will give you a share of their ETF. That actually works in the inverse as well. So if I have a share of the S&P 500 ETF, I can actually say, give me the underlying stocks of the S&P 500. They'll actually do that, and they'll actually give me the stocks, not give them back to share. It'll work the exact same way with Bitcoin. So if I have a share of this Bitcoin ETF and I actually want the underlying Bitcoin, I can actually go to Van Eck and say, here you go, Van Eck, here's the share, and now give me my 25 Bitcoins. And they will actually give me my 25 Bitcoins. So the reality, yeah, there's an extra layer there, but you actually still do kind of own the Bitcoin. So anyways, so this is their one argument here and why it should be approved. The next section, they really get into meat and potatoes of the major hurdle. But they're basically saying, if you combine OTC and futures, the market's not unregulated. The OTC market is superior, it's institutional, it's got a principle, kind of mentioned phone to phone. Price manipulation is very difficult to do OTC, and And they've basically approved other commodity-based exchange-traded products like gold ETFs now. And the last bullet point is one thing I mentioned before, that this is for institutional investors. It's kind of step one in the process. So they actually traded a letter back in January. Uh, and this letter is really about price manipulation and other issues. So some of this might be a recap of what I've talked about, but I think for Van Eck's credit, they're actually really focusing on what the SEC is really worried about. So here, the issue number one, potential price manipulation. So I almost read this kind of word by word, but uh, first, the first bullet point here is that the ETF will be priced based upon the OTC market. It will not be priced upon what happens in BitMEX or FedEx or any of those. It's going to be based upon the US OTC market. And that's important because ETFs have really two types of prices. You have the market prices and you have what they call the NAV. And the NAV is the net asset value. So, what the ETF provider actually thinks the underlying assets are worth in the ETF. It's actually often that the market price and the NAV differ by a little bit. But either way, it's going to be priced upon the US OTC market. The OTC market is not electronic, again, kind of phone to phone, principal to principal. And it's very difficult to manipulate the OTC market. And more importantly, it's also very regulated too. So they actually hit upon the potential manipulation of the OTC market. And this is a pretty good argument here, is they're saying if you want to manipulate the OTC market, you have to do two things at once. You have to implement parallel manipulations in the exchange spot markets. So whether it's, I'm assuming here, unregulated spot markets, so BitMEX, for example, and you would have to do it over on the OTC market. So that's going to take a ton of capital across multiple exchanges, across multiple currencies, so very difficult. And then here, and this is actually a kind of partly the Winklevoss argument, which this part is not actually too bad. It's the arbitrage opportunities that exist between different exchanges. You actually see that. So I mean, the reality right now, you could have money in Bitcoin on a couple of different exchanges, and if the prices get out of whack, you can sell your Bitcoin on the exchange with a higher price and buy the same number of Bitcoin on an exchange with lower price. You end up with the exact same amount of Bitcoin, but you have money, more US dollars. That is arbitrage. So what is a 24/7 market with tons of liquidity across many different exchanges? You see arbitrage happen all the time. So therefore, manipulation, it's actually very difficult in some respects. I'm talking major manipulation, not just like faking volume and things like that, but really moving the price because of you have to implement across multiple exchanges. Okay, another slide here. It's about the NAV. I actually just mentioned it a few minutes ago about the NAV. The ETF is going to use OTC index for pricing and the NAV. This kind of goes into the mechanism a little bit. But the key thing here, and I mentioned before, is the OTC desks follow anti-money laundering, know your customer, and various other regulations. So that's very critical. So it's the pricing mechanisms are based upon regulated markets. Here is actually a very powerful slide. So they actually title it liquidity, but it's actually a pretty important buzzword here, and that's in the third bullet point. So it's the OTC trading volume in the US is significant. I think the word significant is extremely intentional here because the SEC in their denial letters talking about markets of significant size. So here's the CBOE is directly saying, yeah, the OTC volume is significant. And they say the OTC trading volume can be 25 to 50% of on-exchange volume, which is about $250 to $500 million. And you combine that with futures trading volume of 150 to 200, you have something that's fairly significant. Now, hopefully the SEC doesn't watch this because I would like this ETF approved. I think this slide is a little disingenuous because they're basically only including BTC, USD, exchange, spot. transactions. They're not. I don't believe they're using like BitMEX or anything like this. So kind of overinflating the value of the OTC market. But without a doubt, it's growing. It's getting bigger. And if you combine it with futures, U.S. futures for that matter, Gemini and various others, you're beginning to get a market that's a much bigger size. All right, so it's another part, and I think this is a very another critical component that they actually mention in a denial letter as well. So not only is Van Eck hitting the price manipulation and doing a little bit better job, although that's honestly pretty damn hard to do, but they're doing a better job. But they're also hitting on the other potential issues, a little bit more minor. Like I mentioned, the institutional versus retail base of the ETF. And this is also custody and security, whether it's cybersecurity or operational security, whatever it might be. And what they're going to do is actually have insurance on the ETF. So, God forbid this ETF gets hacked and the Bitcoins are stolen, they actually have insurance to protect the underlying investors in the ETF, which none of the other ETFs actually had. So that's a step in the right direction. And I believe that's the end of the presentation. Yes, now they just go like about Van Eck, etc. But ultimately, just to kind of give you an idea of what I was thinking in the past, if you go back 4 or 5 weeks ago, I think I mentioned I was like 80, 90% confident it would get approved. In terms of time, I don't think that necessarily matters, whether it's end of September, end of the fourth quarter here, or first quarter next year. I was pretty confident. Now I'm a little bit lower, to be honest with you, just because the recent denial letter, even though it didn't come straight from the commissioners, it really focused on price manipulation again, kind of made it seem much more of a black and white issue versus a gray issue. But the reality of the situation is we already have one commissioner. So at least one commissioner doesn't see it as a black and white issue. And when you put everything together, this package that CBOE Van Eck has is just vastly superior to the others. When you factor in there's no leverage, when you factor in there's insurance, when you factor in it's an institutional product, not a retail product, when you factor in its OTC pricing, you put all that together, it's just so much, just frankly superior is the best way to put it. That does that trump that not all the markets are regulated, that there's still some markets out there that are unregulated that can that some price manipulation could occur on. It's a tough call, where I think if we only need one commissioner, it's certainly possible that we can get a 2-2, maybe even a 3-1 vote in our favor. But at this point, I'm more kind of copping out, like a coin flip type guess, honestly. It kind of remains to be seen, but certainly this is the best ETF out there for Bitcoin at this point in time, one with the greatest chance of approval. And if we're going to see one that gets approved, it's going to be something like this, in my opinion. Whether it's this exact ETF, if this one gets denied and we have to wait a year or two, the one that gets approved is probably going to look very, very similar to this. So I don't think the structure of the arguments are going to get any better. It might just be a passage of time where more exchanges get regulated and the commissioners get more comfortable. But at this point, like I mentioned, kind of 50-50, I'm still fairly optimistic because this is frankly a very strong proposal. Even the fact that they went this deep with this sort of presentation to the SEC, honestly, that just seems a lot stronger than potentially what the Winklevoss team did, which frankly just seemed kind of weak, just saying Bitcoin was something that couldn't be manipulated, which, then maybe there's some truth to that on some levels, but that's not what you argued to the SEC. So anyways, guys, thanks for joining. Hopefully this helped you guys understand exactly what the Van Eck CBOE ETF is and why it's important in terms of the Bitcoin and crypto universe, and why it might actually get us to all-time highs. And we're going to see a lot more institutional investors buying into Bitcoin and holding Bitcoin, more importantly, if we get an ETF. And that's, of course, going to make it more of a mainstream asset class, which is going to allow more businesses to want to transact in it. I mean, there's a lot of second, third order effects that are tremendous. So It's pretty important. It's going to take some time. Obviously, what we have going on with ICE in the fourth quarter takes a little bit of the necessity out of this. But either way, this would be huge if it passes, and I think it has a pretty good shot. So, thanks for your time, and if you learned anything or just want to, go ahead, retweet and share this. Thanks, guys, and if you have any questions, feel free to direct message me on Twitter. I'll be there. So you guys take care and have a good night. I guess depending on where you're at. Bye.